Hey everybody, good morning. Let's start a poll. Good morning, good morning. And let's see if we can get started. Welcome to the show. Looks like we got channel members. My broadcasting software is being slow loading. There's the chat. Looks like Sergio, Craig, Mark, Arturo, Diane, Steven, Swinburne, Brian, Gaten, David, Ed, Steve, Frank, Andrew, Darren, Dan, Ted, Don, Wrongemer, and Digger. Good to see everybody. Good to see everybody. And apparently I clicked on the wrong thing. Awesome. Love it when I click on the wrong file. See if I can get this to pop open here. One more try. There we go. It's out of sorts this morning. It seems like my theme of the day every day. All right. Welcome, everybody. Brand new year. Same old madness. JPMorgan putting out a, I guess, polishing off their crystal ball, trying to put out some predictions, some themes, some ideas on what's going to happen this year. And, we sit here, we look forward. We have no idea if we're going to be a financial genius or a complete idiot as we trade in 2026. And yeah, it's just another Tuesday. Just another day in a long sequence of days. So every year, these big banks, the so-called smartest guys in the room, they put on their prediction hats and try to make some, polish up that crystal ball, try to make some predictions on what's going to happen for the year. It's a fun little ritual. They all put on their little wizard hats, gaze in the crystal ball, and tell us that the market's going to do things. Where it's going higher, going lower, going sideways, what's going to be the hot, what's going to be the not. And usually they're about as accurate as a weather forecast, trying to pick exactly where the hurricane's going to hit. So there's one desk, one little corner of the financial universe that's been suspiciously right more often than not. JPMorgan's trading desk for 3 years running, while everybody else has been flipping and flopping from bull to bear and back again. These guys have been stubbornly saying stocks are going up, and they've been right. They even called the big dip last year the Liberation Day meltdown before it happened. So maybe it's worth taking a deep dive into what these guys had to say for 2026. Maybe we should listen. Their first note on 2026 is, they put out this report, and it's in. I looked at it. The verdict, they're going to be what we call tactically bullish, which means, in Wall Street speak, we think it's going to go up, probably, but we're not sure, so don't blame us if it doesn't go up. Now, the why behind all this is where it kind of gets interesting. It's a story of two massive opposing forces in the market, a tug of war for your money. On one side, you have the most powerful economic force on the planet, and on the other, you have a couple of black swans floating around in a lake full of gasoline and somebody throwing lit matches in the pool. So let's break it down. First off, the bull case. The party, it just may keep raging. The story, it starts and ends with us. Well, not us specifically, but unless you were the one who added a couple $1 million into your checking account recently. But it's the American consumer, right? We all buy things. Remember, all that talk about potential recessions, how everybody's running out of money, It's it's kind of true, but on the other side of the coin, it's kind of a lie. It's a big, beautiful, comforting lie that we've told ourselves, while the reality is the American households actually, despite running up credit card balances, we're sitting on a dragon's hoard worth of cash. Since the end of 2019, household net worth is up $57 trillion with a T. Checking accounts have ballooned from $1.5 trillion to over $5 trillion. So there's a bunch of cash sitting out there. Maybe not in your account, but it's out there, and it's in checking accounts. It's not in savings accounts. It's not in trading accounts. It's in checking accounts. And maybe people are saving for a rainy day, but maybe they aren't. Maybe they're saving for a trip to Mars. But a lot of it's being spent. Retail sales still climbing. This isn't a recovery. This is a party that keeps on going. And what are the companies doing with all this cash that we keep pumping out there? They're not just building new factories or hiring 1 million people. That's old school thought. The new school move is to buy back their own stock. Last year, S&P 500 companies spent $1.1 trillion just buying their own stock right off the market. It's kind of the ultimate financial cheat code. Fewer shares means earnings per share goes up. And even if the company didn't actually make more money or do anything new, it's like getting a better grade on a test just by taking out some of the questions. And it works. I mean, look, companies like General Motors, they used massive buybacks to help their stock jump 50% last year because their earnings look better. So the first investment opportunity is simple. Don't bet against American consumers that have a full wallet. Follow the buybacks. These companies that are basically setting a floor for their own stock price. They're the ultimate dip buyers right now. Now, that was the happy story. Now let's talk about things that maybe should make you worry a little bit. Maybe clutch your portfolio like a teddy bear as you fall asleep at night. See, JPMorgan's bear case highlights a few nightmares. The first one, the one we've talked about quite a bit, the AI bubble potential. We all love AI, right? It's the future. It makes my cute little thumbnails. It helps me write this beautiful monologue. It's going to change the world. But it's also terrifyingly fragile, especially the investment case here. Remember an event from last year called DeepSeek Monday, almost a year ago now, while we were all patting ourselves on the back for, playing with ChatGPT, a Chinese company sneaks in the back door. We're talking about DeepSeek. They dropped this AI model that wasn't just good, it was better. And it ran with a fraction of the cost. The market kind of freaked out a little bit. Nvidia stock down 10% in one day and about 25% over a couple days, wiping out $500 billion in value. Poof, gone, boom, instantly. That's the fragility. That's the risk. The Magnificent Seven stocks, Apple, Microsoft, Google, all the rest of them, Nvidia, they make up almost 35% of the entire S&P 500 value right now. Their fortunes right now have been tied, interwoven into this AI story. If that story starts to change in some sort of drastic way, if China or some open source project suddenly just makes a leap forward and makes all of their expensive tech look obsolete, the whole market could catch a nasty cold. And we could get a massive pullback. That's a black swan type thing. And then there's the political drama. Oh, the drama. You remember Liberation Day? I mean, that was when seemingly surprise tariff announcements sent the market tumbling 10% in 2 days. I mean, the drop was bigger than COVID. 100 points bigger on S&P, yet lasted 10 days longer. Well, get ready for round two. The Supreme Court is literally, as we're speaking, debating whether the president is able and can just impose tariffs on a whim. The stability of global trade hanging on a court ruling. No big deal, right? This is political risk. It's real. It's potentially an investment angle all on itself. When the market panics over headlines from Washington, that's when the dip buyers, the retail crowd, and the corporate buyback machines tend to jump in. It's volatile, it's nerve wracking, but it's opportunity. And then JPMorgan points out one more thing. A new source of demand for US stocks that almost nobody's really talking about. It's kind of the wild card out here. Could potentially change the game. This demand is coming from the Chinese retail investor. Right now, Chinese households are sitting on a record $23 trillion in savings. Think about that. US is sitting on $57 trillion, yet Chinese households are sitting on $23 trillion in savings. We're not talking about trillion one, we're talking about $1 trillion. $23.3 trillion. Their own stock market, it's a hot mess. Their property market, well, it's still trying to figure things out. Even worse, really, than the stock market. They're desperate to get some money out, invested in somewhere that's not an absolute dumpster fire and gonna make them some return. Where do they want to put it? The biggest, best financial market in the world, right here in the good old US stock market. The demand here is insane. I mean, the Chinese funds that are allowed to invest in US stocks, they're full to the rim. They're literally turning people away, capping new investments at just 10 won a day. That's less than $2 when you convert it to US dollars. They've hit their government mandated quotas. Think about it. This is why all those crypto places want to get into stock trading. A tidal wave of money, trillions of dollars, is potentially being held back by a government mandated dam. The Chinese government controls the floodgates. The current quota, less than $100 billion. For comparison, US retail investors poured in $300 billion into the market last year, and look at what we got. If China raises their quota or they figure out how to get around the government mandates, it could be like a fire hose of new cash flooding right into good old S&P 500 type companies. This is one of the biggest, most under the radar investment opportunities of them all. So how do you play it? You own the market, you own the big boring blue chip stocks. It's a new wave of capital that can flow in. You own the ETFs that track the S&P, the NASDAQ, because if the dam breaks, or when the dam breaks, or if the dam breaks, everything gets lifted. The sea floats all the boats. That's the lay of the land right now, according to JPMorgan. And they're the ones that have been getting it right for the last 3 years. A superpower consumer, a corporate buyback machine, an AI bubble, and political chaos. And a $23 trillion wild card sitting there waiting in the wings if they can break free. It's going to be a wild ride for 2026, that's for sure. Nobody has a crystal ball. I certainly don't. I have a bag of unicorn dust that I attempt to sprinkle on the market. So grab your monster, stay sharp. Maybe you like coffee instead, but don't be afraid to buy the dips, because chances are a corporation or maybe a Chinese savior out there with a fistful of won is going to be buying right alongside you. So that's all we have for the monologue today. Let's jump into charts and try to find some opportunity. You can let me know what you think in the chat. And let me do another poll. see what you think. I typed that the right way. There you go. See what everybody thinks on this one. Will Chinese people find a way to get their money to the U.S. markets? Let me know what you think. And jumping over here, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. And if you want somebody just to tell you what to do, there are people out there that can do that. So, gotta hire them. And, yeah. So, calendar. Not really much happening this week. Not much at all. Kind of dry out here. Wednesday we get some jolts. Thursday we get some unemployment maybe. And then Friday we get the monthly jobs and some housing starts and stuff. Maybe down here, the University of Michigan consumer sentiment and inflation. But not really, just not really a lot out here, right? I mean, it's kind of a boring week. We have the FOMC meeting coming up down here at the end of the month. We should get some CPI next week, PPI, retail sales. But there's just not a lot this week. Next week ramps up with the earnings, financial earnings getting started. That's cool. Disconnect me. We've got ES overnight, just kind of chilling out here. We're at a lower high, higher low. We're just not doing much of anything. We did poke through the top here. I was cautiously bullish if we did that. We have been holding on to this 15-minute roadmap line. So this is support right now. If we hold on to that, potential to go higher. If we break down below this area right here, around 69.30, 69.40, can lead us down here. And then we have this support level right there at 6,900. That's what I'm looking for on the S&P. So we did poke above that 618. We did get above that little high we made on the way down last day of December. So we're kind of set right now to push on up. Possibly 7,000, maybe even 70.40 on the futures. Now, looking at the cash index, we have a little bit different story here. And when you put both of these together and you're like, which one tells the truth? I like the ES, I like the futures because they fill in the data that's missing out of the cash index. But the cash index is the king. So whatever we see here is what we stick with. That's the, when these two are at odds with each other, you put priority on the cash index because they're going to come back into agreement at some point. So while ES has the potential to go higher, S&P here on the cash index is still grinding this gap down resistance. And as long as we're hanging out below it, down would be the direction. So as soon as we fill the gap here and get above this, and we could just fill the gap and drop, so got to be careful. Filling the gap is not the all clear. Got to get above. And there's not much room to a breakout, so it's kind of a late indicator, if you will. That can set us up for 69, 63. And you're like, wait, I thought you said different numbers. Yeah, these two run different. All right. There's a premium on the futures over the cash index. So each chart on its own. But the futures aren't going to go crazy different path than the cash index. So looking at NASDAQ too, we still have lower highs. This is also in agreement with potentially going lower. NASDAQ cash index, same situation. Lower highs all the way across here since October. Lower highs, lower highs, lower highs, lower highs. This is a downward setup right now. Unless we break out through this downtrend. So right now, a break above 25.6-ish could set us up to go higher. But as long as we're staying under there, potential for this to take a spill to the downside. You're like, what about SPY? What about QQQ? Those are derivatives of the cash indexes. Pretty much lined up the same, but not perfectly. We do have that gap down on SPY. QQQ, it's about a 41.1 multiplier from QQQ to NASDAQ. And we still have the downtrend of highs all the way across the board here. So we're going to have to break above 623 area, 624, 625 in order to tip the odds we're going higher. We'll take a look at the GEX map, the gamma exposure, and what the options market's telling us at the conclusion of the show here when I give my bias for the day. Russell here still kind of grinding it. Still kind of grinding it. We did a three-wave move, tapped just shy. We made the lower low, tapped just shy of what would be kind of a correction. Trend, pullback, potential continuation. So this one could be set. It has potential to push on up to this 2740 area. 74. 2740 right here. We have potential to push it on up. This was a good enough little correction. Move up, pull back, continuation. So if we see this breaking above 2600, we're probably going to push it on up to 2700 on Russell. And you may be like, well, what about the cash index? Looks a lot the same right there. And as far as an ETF goes, probably going to push it up to this 268, 270 area right here for the IWM ETF. Put it right in there. Oil still grinding in here, pushing into this downtrend. Now, as I dove deeper into a lot of the information about Venezuela yesterday, it looks like their real oil capabilities, capacity, proven, they may have proven reserves of 300 billion barrels, but the real obtainable, easily gettable oil that they have that likely to be able to get out of the ground for the next umpteen years, only about 20 billion barrels, which is a pittance compared to lots of the other places in the world. And their infrastructure is all broken down and dilapidated, and really they may not even be able to get a million barrels a day out to the ports, and the ports may not even be able to support getting a million barrels a day onto ships. So to replace, if we're looking at replacing Canada with Venezuelan oil, we're going to have to pump like 3 million barrels a day and get on ships and then move those ships across the Gulf and get them to the Gulf Coast. And the infrastructure just isn't there. And it's probably going to take like $1 trillion worth of building all this infrastructure. And it's going to take tens of thousands, if not 100,000 people going down there. And the people from Texas, these big, beautiful oil companies, as somebody put it, probably not so keen on going to Venezuela right now. Their infrastructure and stuff is just not like what it is here in the United States. So people, it's going to take a lot of convincing with good old green dollar, greenbacks to get people down there to actually do the work. So it's going to be an expensive proposition. It's not just so, roses and lollipops. It's kind of interesting the more I dove into it yesterday and looked at it. So maybe not the big, maybe oil wasn't really the thing as social media kind of blew it up to be. Anyway, oil still set for a drop. We're on a little mini pop. We can go up here. Resistance is right up here at, roughly 62. And support down here at 50. If we take a spill. Now we may bounce at 55 once again. But this is a downtrend. It's been a downtrend. It's been a it's been a downtrend locally, and it's been a downtrend since we topped out back here in 2022. We're probably still going to erode the price till we get down to the 50s, at least. GC. Making another little push overnight. Now, a little bit concerning is that gold going up, silver going up, copper going up. When all three of these things go up, both precious metals, GC, gold, silver, and good old copper. Now, this is precious metal, right? The majority of use for it is just jewelry. This one, a little bit of both, industrial and precious. This one, pretty much industrial. So we've got this interesting gamut here. There's only a few times in a recent past 25 years, 30 years, that all three of these go up at the same time. Time number one, dot-com bubble. Time number two, great financial crisis. Time number three, 2019, right before COVID. And now this is the fourth time. These are all going up at the same time. The cautionary tale. Something's happening. Something's happening. Something's brewing here. So be careful. Gold, silver, copper don't usually all go up at the same time. It's just not typical. Bitcoin trying its darndest to break out of this consolidation. Immediate resistance coming up at the roadmap line. The 618 up here at 106. Okay. If we can get above 106, we're set for potential going on up to the targets. I'm not convinced we're going to do it. That's pretty major resistance there. And we're struggling to get through these highs. Struggling. I would have liked to see that pop on up here yesterday. That would have got me a little more optimistic. And I don't just want to turn down there at that 96. That's a first move up, a retrace, and a second move up. That's a big A, B, C type correction. That can easily result in a bounce off of the roadmap line, off of that. What would be crazy is that proportion, A equals C, and the roadmap line all coming together right there. We turn down. That's probably an indication of crypto winter right there. Trend, pullback, continuation. So very cautious about what happens right up here around this 96 to 100,000 area. Very cautious. And then even if we get above that, we still have the 106,000 right up here that we're going to have to get above to be able to go higher. So I'm not sold on the narrative at this point. Ethereum coming up pretty good though. Roadmap line coming up here, 33.65, and then prior high right up there, a little higher at 34.50. Now I like the proportion here. This move up, this retrace, this next move up. If we can keep it going, big if. I'd really like to see this push on up here, back test, maybe even up here and back test. One of those two. Push on up, then maybe back test again on the roadmap line. That would be an indication we're going higher. I'd really like to see if we get that move on up here, that we don't overlap this price action right there. That's what I'm looking for on Ethereum. This looks a little more bullish than Bitcoin. Bitcoin's really questionable right now. Just really questionable. I'm just not sure. Really don't care for that price action right there. That's very overlapping, not indicative of any kind of new trend going on. Now we had that same little move up, retrace, move up potential, but it just doesn't look very strong right now. And we're stalled out right at the prior highs. So caution in crypto. I'm not changing my stance there. I'm just very cautious. We may be in crypto winter. NKD came all the way up, tapped the prior high, did that in a 1, 2, 3 fashion. ABC, absolutely beautiful correction. And unfortunately, if we break back down below this 50,400 area, probably indicates we're going to take a big spill. You put your alert right there. If we get back below that, could kick off a bigger freak out in the market. So we could be stalled out on risk on assets right now, Bitcoin, Ethereum, and US stocks. Dollar, still churning here. Look at that big rejection yesterday. Trend, pullback, could go on for a little bit longer, and continuation would be down. Still expecting this to make a lower low sometime out here later this year than what we made back in September. Bias is down since we're underneath the roadmap line. That's the resistance right now. On the dollar, Apple coming on down. Probably going for the roadmap line. At the minimum, we're going to backtest this breakout. If we can hold on to the breakout, that's why this big red line's here. Hold on to the breakout. That's positive for going on higher. But with that kind of acceleration, I'm not so sure we're going to hold that breakout. I think we're going to come down to the roadmap line at a minimum here. That kind of lines up with this prior high and this consolidation right there. You can say it's Bitcoin. There's lots of speculation on what it would be for Venezuela. I don't know if it's the Bitcoin. I don't know. I mean, Trump says it's the drugs, you know, so maybe it's just the drugs. 240. That's the resistance going higher on Amazon. As long as we're underneath that. Take another trip down. Break above that 240 area. Upside. Google. Move down, retrace, hang in here at the resistance. Get above the resistance, 337 upside. If we return down here, break back below the 296 area, probably coming on down to this consolidation area. And the roadmap line actually starting to push up through it. So there's potential that we don't make it all the way down there. We just get to the roadmap line if we break down. Meta. I wish this thing, I hope this thing just goes ahead and finishes this baby up. One swift kick in the pants down to that 630 area. Hold there, break back higher through the roadmap line. That's going to be a bullish sign. Kicks it off for somewhere up in the 1100 to 1300 on the upside. Probably going to take a couple years to get there. Can't shake this cough. So that's what I'm looking for on Meta. Microsoft. Oh, holding on to the lows so far. This is starting to look like we're going to take a bigger trip down, though. Right there. If we get below those prior lows there, 465, watch out for the bigger drop. Bigger drop, bigger drop. Probably going to take us down to the 415, 420 area, maybe. Between 450 and 430. Say that. That's kind of the target zone. If we break down below this low, up here at 465, probably taking that bigger spill. NVIDIA, still struggling right here. As long as we're underneath this prior high and this 618 at 195, still have this opportunity to come back and back test the highs from 2024 around this 150 area. Tesla got a 1-day reprieve on the push down, but still pushing down into, I expect this 422 retest, maybe even down to 420 right there. Just expect that to happen. And then if we can get the bounce there, should take us up to all-time high. But if we don't hold on to that, roadmap line support right underneath us at 395. So another 25 points lower potential right there if we get below that 420. And, you know, there's potential that this all takes a little bit of time and we come together right over here in late January, right into earnings. There's potential we just kind of and all come together right there. Netflix, man, hadn't been able to hold a low yet. Still grinding lower. Probably indicating we're probably going to push it on down to this 85 area. Right down in there. We do have earnings coming up here. So we'll see if they can reverse their fortune here. Coming up on the 20th, which is at 2 weeks for now. After the close. Speaking of after the close, coming up today after the close, 5 p.m. Eastern, I have 30 minutes of awesome. That's the only time of the week where I do requests. So if you've got tickers and charts that you want me to review, come hang out 5 p.m. Eastern today. I'll be live right here on YouTube. And can't do the show without you. I mean, that's the whole point of the show is to do requests. We do it for at least 30 minutes. And then channel members, we do an Ask Me Anything starting at 6 o'clock. So I give you a little bit of market news and stuff for about 15, 20 minutes. And then we jump into requests for at least 30 minutes, if not 45 minutes or so. And then I move to an Ask Me Anything where I finish up the requests and any questions that channel members have, address those. Now, I'm not going to answer questions like, how do I make money in the market? Yeah, come on now. I'm not going to tell you what to trade. That's on you. You got to make your own decisions. So Melly here, looking for this to break higher, get that upside. 2780. OIH. Vanek Oil. Struggling to try to break through. Right there. If we can get on the upside of that, we can break on higher, but right now that looks like a downtrend. It's kind of been intact for a little while. We reject off that, come on back down, make a lower low. Korea Bulls, still on. Is this today's list or is this yesterday's list? Let's refresh the list real quick. I think this is yesterday's list, yeah. Drug, big pop, probably coming back down to the roadmap line. Bright Minds Bioscience. I just don't touch biotech. Like, be careful, biotech. It's dangerous. You can lose money. AGQ, pop it again, back to the highs. Axon. Roadmap line resistance coming up right there. You look at that last bounce right up in the targets and big retrace. Now we're in a downtrend Move down, retrace, holding below resistance. Continuation. Be down. Now, how do we know if we're going higher or lower? We break above the roadmap line. You've got the roadmap line, right? If you don't, check out the channel homepage. The video pinned there tells you the code for it. If you're like, I'm not a coder, I don't want to mess with code, it's cool. Links in the description, $5. You can add it to your chart. Easy button. It's this trading view. I have it for a few other platforms. It's pretty easy. You can go get the code for free just by watching the video pinned to the channel homepage. And then you can use AI to convert that to whatever platform you want. So if we can break above 70, that 717 area could be set for 953, which is a pretty big upside. Stop on this whole thing, dollar below the low, right over here. LMS. Yeah, I'm not touching that. Another pharmaceutical, biotech pharma, same med tech, med specialties, all that stuff, same junk. FDA can just approve or deny stuff, and be careful for a pullback here. Another pharmaceutical. You know, when pharmaceuticals dominate the chart, the list, it's usually a sketchy day. I've learned that over the years. Be careful out there. That thing already playing out. 371 next upside. GDXU still has potential to come back to the roadmap line. VST under the roadmap line. Careful. PPLT. This is probably going on up. Platinum and palladium probably going on up. 270 next upside. Could take gold and silver with it. Could take copper with it. FCX. I thought I saw somebody saying FCX was ripping today. Yep, up to 57 targets. Got the bigger picture target up around 80s. And let's see. Korea. Just keep ripping. LEU. So this one had some interesting information. They get a government contract for like $2 billion. Right, $2.3 billion right there. That was mostly on the back of a government contract right there. Building a Tennessee manufacturing plant. Should be interesting. It's a uranium enrichment company. BICR. Gotta have the fuel to build the plants, or to run the plants after we build the plants. This has resistance coming up at 161. Oklo. So the big question here, did we make a bottom? Right? There was not a nice clean ABC down. This was just kind of a drift with a little bit of volatility in it. It's possible that was it. We didn't quite make it all the way to the back test here, but we did. You know, this was a back test of the breakout, so maybe we're just back testing the top of that consolidation here. It's good enough. Resistance coming up right there at 130. Get above that. There's the target, 223 for Oklo. UNH. Now that could have been deep enough on that one. So watching the resistance here. If we poke on through, there's the prior high. We got to get above. This one's set for a bigger move on up to 625. OS. Is the reversal gonna stick? Good question. Low, high, low. Resistance is right where we are. 24 to 27. Be careful. We turn down off of that. Downtrend, pull back, continuation. I'm not touching it. Yeah, SPY breaking 60, 690. PALL. So palladium probably got the biggest upside potential out of the industrial metal type things. This thing breaking back above this high we made sets us up for this rip right here. 43 to 51 right there. ADI. Watch out for a pullback. FUTU. Getting above. Oh, look at that. Beautiful. If we stick this today, stick the close above that 618, 210 to 218 is the next upside target. AEVA. There's the high way up here. Here's the low down here. Break back above 22. Kicks off the 48 target. Duolingo still hunting the bottom. Despite the little bounce today, I still think we're going lower. WVE. Wave Life Science. Sounds like more biotech garbage. MU on a path for probably 415. Right up there, next to fib line up. ALB breaking up. There we go. This might be the breakout we've been waiting for. You know, Jody, if you're watching this, exciting times. This could be set for a run up here to 900 to 1,000. If you're, that's a big upside potential. That one could be a big big outperformer this year. Maybe take longer though. Maybe longer than this year. Could take out, and to get up there, it could be in 2027. But that could be a big performer right there. Leverage on Oklo. Reddit has this potential bounce right here. Now, if this fails, probably coming down deeper. But right now, set for pop to 300. TSEM, Tower Semiconductor, stalled out right here. Watch for the drop back to the roadmap line. TCOM, set for the 80 target up there. Microchip, set for the next target up around 83. TXN, if we can get above the 618, 234 on the upside. SMU, 2x long on SMR. How's SMR doing today? And not confirming a bottom yet. VLO, Valero, 189. If we can get that continuation up there. EAT. Trying to confirm. Yeah, that's a beautiful correction right there. Absolutely beautiful correction. Perfect proportions. Struggling at the 618 here. If we can get back above the 155 area, probably kicking off 211 target for EAT. C. If we can get back above this roadmap line, we're set for push on higher. Big picture with this big correction. 525, probably the bigger upside target, and this could take a little while to get there. Could take into 2027. SQM, confirming above that 618. Probably going to set off the 139, 165, maybe even the bigger bounce target up here to 285, 300. LSTR. Not convinced that's a bottom yet. Here's the high, here's the low. Resistance coming up here at 167. NVO. Their Wegovy pills coming on the markets. Should be today, I think it is. Why did that jump to something else? Why didn't it just pop up the news? Yeah, this should be on the market today, I think. Priced at $149 a month for 1.5 and 4 milligram doses. Higher at 300. You don't have to jab yourself. You can just take the pill. And opens up a new market. But they don't really have the manufacturing capacity here. So that's got 100% tariffs on those pills. Be careful. If Lilly gets a pill version, they have a strategic advantage over NVO because they have manufacturing capacity in the United States. Shake Shack still hunting the bottom here. Higher low so far, but it's been a big consolidation. We haven't really gone anywhere on Shake Shack for a couple of years. Some 2021. Look at that. This thing's been sitting sideways. Tried to break down, tried to break out, sitting sideways for 4 years, almost 5 years. It's not a trend. Like, I'm a trend pullback continuation trader. That's not a trend. That's a sideways chop, and it goes back even further. So caution on that one. It's not my ideal kind of stuff here. NBIS, there's the trend, there's the pullback, continuation, confirmation above 112, looking for 156. INOD, trend, pullback, continuation above 75, kicks off 102. Chevron was popping, hit the target, now we're dropping, coming back down, probably to the roadmap line. NXT, watch for that to come back down to the roadmap line. Toll Brothers, or no, Instill Biotech. I think Toll Brothers, TOL. That's a lower low, so Biotech Pharma, be careful. VRT, getting the pullback here off of that 618. There's potential for this to go higher. We did not get the close above the 618 yet. We poked above. This is not a close above. That was not a close above. Need the close above to kick off the higher target, 212. This can still move lower. JCI, Johnson Controls, back to the roadmap line. Nice, beautiful ABC correction. Absolutely beautiful correction. Move back through 118, sets up the target 126, 128. Not a big mover, but MOD, Modine Manufacturing, made a lower low. Pop back up through 142, kicks off 175. Stall. Sounds like more biotech pharma, med specialty. It's potential to fill that gap back down to 18. APGE. Yeah, upside to 92, it looks like. More therapeutic stuff, though. CLS, roadmap line. HSIC. Trying to break through this downtrend. We can get through it. Lowest low. Struggling at that 618. If we get through it, 98 would be the upside on this one. And more medical junk, so be careful. AIG. Ouch. Insurance just getting beat down lately. PGR. Insurance continuing to beat down. I'm just seeing lots of insurance have trouble here. APH, probably come back to the roadmap line. Shopify. 190, 197 upside potential. So I have some stuff set up for potential entries today with this roadmap bounce. ALV, look at the correct one on the New York Stock Exchange. I don't know why that one showed up here. Here's the high, here's the low. And the bigger bounce potential up to 138. This small bounce potential right here, 132. And turn on the algorithm with the statistics. There you go. Right there's the entry. There's the target, 132.50. Next one, BKR. High, low, entry, 52.23. BP. High, low, entry. And we're going to remove some lines. Entry was right there, 38.39 target, EE. There's the high, there's the low, entry, 30.95, GGAL. High, low, entry, 65.84. Oh, yeah, I don't like this because that's kind of a downtrend and a correction, but there was the high, there was the low. This is the pattern that it picked up on. The algorithm didn't like it. It filtered it out because of the downtrending chop here. PSX, trading view algorithm, that is. PSX entry, target 147, VTOL. And there's the high, there's the low. It didn't quite, which high did it pick up? That high. And the filter picked up this lower high. So the target's actually at 39, but 43, reasonable target right there too. And this one's not got a long history of working out in a negative profit factor, so I probably wouldn't touch it, but to each their own. So my bias for the day right now looks like we might be breaking out higher. Here we go, pushing on through. We tapped the gap fill. So now we gotta see, like, can we get above it, or are we gonna reject off of it? If we reject down right now, that's probably going down below this low. That's what it's telling us. Russell being volatile. SPY trying. See what we got on the gamma. So we're sitting in this bubble right here for QQQ. There's not really much coming up on out here for the, the normal monthly expiration is out here, and there's no giant billion-dollar levels at this point. This biggest level that's right there is 660 million, which is not very huge right now. Check on the SPY. Since QQQ is not just going to go in a drastically different way than the SPY. SPY right now has this big billion-dollar level for this Friday, sitting at 693. It's kind of going to be a cap on going much higher. There's just no big support levels or big levels on the downside here. It look like we're going to go visit those. There's a 500 million out there, 300 million, 300 million. Is that 500 million? Ooh. So down at 680. It's almost a 600 million level right there for the normal monthly. That provides a pretty big range right there. It's up to 700 and down to 680. That's 200 points on the cash index. And we're kind of pinned in here with this level for this Friday. So that leaves us probably going to hang out right in this vicinity for the next few days. It's just it's reading the tea leaves. I don't have any guarantees. This is just, I haven't had access to this very long. This is bullflow.io, and QQQ doesn't really say the same thing. So don't really have any big levels for this Friday on QQQ. Looks like we could hang out 16th. Got like 627, 500 million level. And then down here at 610 is a 300 million. That's a big range. So it looks like we're kind of pinned in here. Maybe hang out. I wouldn't expect much if we're going to bust out. I wouldn't expect really going above 627. And if we break down, I wouldn't really expect much of below 618. Anything can happen, but that's kind of the range. And you're like, well, how does that equate to NASDAQ? Multiply by 41.1 roughly. If you're like, well, how do you know that? You just come over here and you go IndieX divided by QQQ. There you go. 41.11 roughly. And that's the multiplier. So you just do the math right there on the ticker. All right. I'll be back at 5 p.m. Eastern on right here on YouTube. I'll be on Market Masters 11:30, and be careful out there today. Looks like we might break higher, but also kind of might have it pinned in the gamma. So if we get much higher, I don't expect it to go drastically higher. At 627, just sitting right up here on QQQ, and then 610 down here. And that looks like we've got pinned in right here, this range. And funny enough, that's where we topped out here and bottomed out here. So I'm not sure we can get out of that. And then SPY. Let's see, that was on up to, what was the big level topped out at? It's back over. And you might be like, what the heck is GEX? It's gamma exposure. It's where the options are priced. It's kind of like putting on a set of MVGs, night vision goggles, and trying to look at the market and seeing where the threats might be hiding behind the bushes. So we might be able to push up to 695. Which would be an all-time high. We have a fairly significant level sitting at 693. So SPY may be able to push out, but I'm not sure QQQ can. It's got more crap going on with it. Hopefully that helps everybody. I'll see you later on today or tomorrow, same bat time, same bat channel. We'll do this all again, hunting for opportunity. Be careful out there. You count, you save, maybe your own.